Is Ottawa on track to experience a traditional spring housing market? Well, let's talk about it. The latest real estate market stats are in for the past month in Ottawa. In this video, I'm going to break it all down. First, my name is Sernoskie and I'm a real estate agent with LePage Team Realty here in Ottawa. And if you enjoy this content and you're looking for more info to help you buy or sell a home in Ottawa, be sure to give this video a thumbs up and subscribe so you don't miss out on further content. So without further ado, let's get into it. According to the Ottawa Real Estate Board, the city saw 809 unit sales in February 2025, and that's a drop of 10.2% from the same month last year. On a historical basis, home sales were actually down significantly, with sales coming in 19% below the 5-year average and 10% below the 10-year average for this time of year. When it comes to pricing, the average selling price for all homes that were sold last month was just a shade under $670,000, and that's an increase of 1.4% from last year. A more accurate indicator of selling prices can be measured with the MLS Home Price Index Composite Benchmark Price, which was $658,000 in February, and that's an increase of 4.4% compared to last year. Breaking things down further by property type, the benchmark price for a single-family home in February was just under $720,000, and that's an increase of 1.3%, while the benchmark price for row townhouse units was $438,000, and that's down 11.6%. The benchmark apartment price came in at $459,000, and that's a 4.5% increase. New listings that came on the market were up as well, and we're just under 1,700 new listings added, and that's an increase of nearly 5% from a year ago. This new inventory, coupled with the homes that were already in the market, resulted in a significant increase in the active inventory, or the total number of homes that are available for sale. At the end of February, there was over 3,700 homes on the market, which is up 61% compared to last year and more than 95% above the 5-year average for the month. There was also 4.6 months of available inventory at the end of February, and that means that it would take 4.6 months to sell all of the current inventory based on current demand if no new listings were added to the market. With inventory currently sitting in the 4 to 6 month range, Ottawa is experiencing a balanced market. This means that the market conditions are favoring neither the buyers or the sellers, and both sides have some room to negotiate. This is also evident from the sales to new listings ratio, which came in at 49% in February. And that's calculated by taking the 809 sales and dividing it by the 1,668 new listings during the month. A sales to new listing ratio of 40 to 60% would also be indicative of a balanced market. And according to the Ottawa Real Estate Board President Paul Chan, the market here in the nation's capital remains steady while a number of factors are currently at play. He said, and quote, "Ottawa's sales activity moderated while prices held steady. Despite increased inventory, market uncertainty continues to influence buyer and seller decisions. Some sellers who had previously delayed listing are now entering the market, contributing to the more options for buyers. While demand remains strong in certain price segments, the pace of sales varies, making strategic pricing and preparation key for sellers." Chan also said that the Bank of Canada's interest rate decisions, coupled with other factors such as the threat of tariffs and the looming federal election, are all implicating buyer and seller decision making. So as we look ahead to the spring market in the next month or two, buyers and sellers may be wondering which direction things might go. And while we expect things to get busier as buyers come off the sidelines as a result of lower interest rates, there's more uncertainty at play currently. Both the tariff threat and the upcoming federal election are both certainly on the minds of Canadians. And with Ottawa being a government town, these factors could impact our marketplace more significantly than some other cities. Higher cost of living can negatively impact the housing market, and as well as inflation data from February, and that was up, coming in at 2.6%, missing expectations as the GST tax holiday ended. While demand for homes is up, current pricing is still out of reach for many, even with the changes to the affordability measures such as increased amortization periods. So if you're thinking about making a move, it's important to stay informed about the current state of the market. My contact information is available in the description below the video. Thanks a lot for watching, and we'll see you in the next one.